Hey everybody, welcome back to Chipstock Investor. Hope you had a great weekend. Happy Monday. It's here again. It happens every week.
Every week.
Every single week.
No case of the Mondays here, though. We're good. We're great. We're going to get you caught up on a business we haven't covered in a long time, but we think it's probably a good time to do so, especially given the downturn in chip stocks, especially those that address power, sensors, industrial and automotive applications, and including robotics, right? We keep getting a lot of questions as of late about robotics, so we'll have a few things to tell you about robotics along the way today.
We have been getting a lot of questions about robotics, and I think a lot of it maybe has to do with Tesla's Optimus robot or Nvidia's chips for robots. There is some caution that needs to be had here. Needs to be real world economic use cases for these things, not just really cool tech. And right now, the most clear use case is cars.
Yeah, absolutely. Cars, also existing manufacturing sector equipment. So like robotic arms that you maybe see in videos swinging around working in factories. Could be an auto factory, some other piece of industrial equipment. Pharmaceutical industry is a big user of this stuff. And then maybe thirdly, somewhat related to the car use case, Kasey, e-commerce and retail fulfillment warehouses. We actually did an article on the company Symbotic about a year ago. We'll just link that article right here for you. We warned everybody last December about this. And if you'd like a refreshed video version of this, let us know in the comments.
We'll tie back into the robotics later in this video, but let's key in on some news for the company Allegro Microsystems. And here's a headline that has some bearing on Allegro. This is Polar Semiconductor, and it was reported in September that they're going to be getting some Fed CHIPS Act funding, as well as the state of Minnesota giving them some cash and tax incentives, plus some soon-to-be-announced private funding to double down on its power and sensor chip fab capacity. You may be wondering, what in the world does Polar Semiconductor have to do with Allegro?
I'll give you a quick rundown on history here. Polar Semiconductor, based in Minnesota, main fab in Minnesota, not such an exciting business. It's an old fab dating back to the 1960s. It's very small. It's changed ownership several times. And as of late, for the last couple of decades, it's been part of a larger Japanese conglomerate called Sunken Electric, which we've talked about in the past when we've addressed Allegro Microsystems. We'll come back to this in a moment. But when we're talking about this company, Polar Semi, and it's getting the CHIPS Act funding to expand its manufacturing, we can really categorize this in the industrial sector of the economy. That's our opinion. We think this is more of an industrialist more than it is a hot technology business, meaning this is really, companies like this really, you need to be all concerned about financial discipline and how the company generates decent returns on invested capital, not necessarily cutting edge innovation. So why do we care about Polar Semi getting CHIPS Act funding?
As Nick mentioned, Allegro and Polar both ended up under Sunken Electric. You can see that in the timeline here. Back in 1990, they established Allegro Microsystems in the US. Polar Semiconductor established in the US in 2005. And then in 2020, Allegro Microsystems was listed on the NASDAQ Global Select Market. Basically, they were sort of spun off as their own company.
Sort of.
Sort of.
We'll come back to that. The relationship here, though, Sunken, the Japanese industrial conglomerate, owns both Polar Semiconductor, which is the chip fab, and Allegro Microsystems, which is a fabless designer, an engineering company for power and sensor chips. So just bear that in mind. So the reason why Polar Semiconductor got the CHIPS Act funding, of course, is to increase its fab capacity there in Minnesota. This checks the box for some of Allegro's US-based industrial and auto customers that are interested in domesticating their supply chains. So maybe a US automaker like GM or Ford or or Tesla, whoever, this might check a box for them saying, hey, this company Allegro and one of its fabs, Polar Semiconductor, are both not just based in the US, but also have manufacturing operations based in Minnesota in the United States.
And you can see we have highlighted there that Allegro Microsystems owns approximately 10% of Polar Semiconductor. And this is why this CHIPS Act funding is actually beneficial for Allegro Microsystems. Normally, we'd chalk this all up to some political jockeying, but this one actually could have some benefit for a company like Allegro.
Yeah, especially considering some of the other third-party fabs that they utilize are UMC, United Microelectronics, and TSMC, Taiwan Semiconductor Manufacturing, both of which are domiciled in Taiwan. So especially for US-based investors that are looking for a way to bet on this whole friendshoring and onshoring of manufacturing back to the United States, maybe a company like Allegro Microsystems makes a little bit of sense right here.
We're going to show you a couple of new slides that Allegro Microsystems posted on their most recent earnings report. The first one talking about their business model. And maybe, Nick, you can explain to us a little bit more about Allegro's business model.
Yes, so they are a fabless designer of chips, which means they outsource the manufacturing. And so when they outsource the front end part of the process, the silicon wafers that get developed and chopped up into chips, those are the purple stars on this map. They're in the US, that's the Polar Semi fab in Minnesota. And then you have a couple others, one in China, and then a couple there in Taiwan. That would be UMC and TSMC. And then the green circles are the OSATs, the outsourced semiconductor assembly and test providers. So those are the companies that, specialize in chip packaging and then device assembly. So taking the chips that Allegro designs and gets fabbed, then taking the diced up chips and putting them in a final device, like a part for a car or a part for a piece of industrial equipment. We're going to come back to this here momentarily and how it has affected Allegro Microsystems' balance sheet. But in the recent quarter, the company has done more to sort of separate itself a bit more from Sanken and also kind of tighten up the relationship with Polar Semiconductor. So Allegro Microsystems did repurchase $39 million worth of shares from Sanken Electric, reducing Sanken's total ownership stake in Allegro from 51%, majority shareholder, down to 33%. This is probably going to be an ongoing thing. And then in addition to that, you can see the CHIPS Act funding that will boost Polar Semi and as well possibly help Allegro Microsystems kind of tout itself as this fully US-based and US-owned chip design company. That's just a little bit on the business model. We'll come back to that here shortly. Kasey, what does Allegro Microsystems even do in the first place? Let's get everyone up to speed.
Yeah, Allegro Microsystems is the #1 leader in magnetic sensing. They get 60% of their sales from magnetic sensors, and they've doubled down on this with the acquisition of Crocus, which we'll talk about here in just a moment. 70% goes to things like automotive sales, and then industrial 20%, 10% everything from gaming to power tools, maybe like a little chip that makes your PS5 controller vibrate or whatever.
Yeah. This is a slide Kasey had made last year. Let's take a look at the more recent breakdown of the revenue here, because they have shifted this up a little bit. And basically, we now just have everything falling into magnetic sensing. They're in the little pie chart on the top right, just over 60%, and then power chips, just under 40%. This is where we think a lot of investors that are hoping to bet on things like robotics, this is where we think a company like Allegro is kind of interesting, because there's a lot of hype out there about companies making actual robots, AI that's housed in some sort of physical chassis and interacts with the real world. A lot of those companies getting hyped are probably not going to be profitable, excluding some of the bigger tech businesses that dabble in that but aren't a pure play on robotics. But a company like Allegro could possibly very quickly turn the corner and become very profitable on this movement. Magnetic sensing is a key bit of sensor technology that you need for a physical computing system to be able to sense what's going on around it. So like those robotic arms in manufacturing I mentioned earlier, or driver ICs, integrated circuits, for an electric motor. So oftentimes this is obviously going into a car. It could be a traditional internal combustion engine car. It could be an electric vehicle, or it could be some sort of hybrid in between. But also, if you really think physical robotics are about to take off, a lot of these driver integrated circuits would be needed to drive every joint, every moving part and piece in a piece of industrial equipment. So this is just an interesting one to maybe put on your radar if you haven't had it there already for this reason. This company does power chips, but also primarily these sensors and drivers based on magnetic sensing technology.
Before we talk about some of the financials for Allegro Microsystems, we'll show you some charts from our friends at FinChat, but we want to give a quick shout out to FinChat.io. They're the sponsor of today's video, and they're offering 25% off any paid plans for their Black Friday sale. It ends at midnight tonight.
On December 2nd.
On December 2nd.
Cyber Monday. So if you're looking for Black Friday / Cyber Monday deals, and you'd like to make charts like this one, either to help yourself visualize investments, or if you're someone that needs to make financial presentations on publicly traded businesses, FinChat.io might be a great partner for you, and a product that we have embedded very deeply in our personal process here at Chipstock Investor.
They have a great co-pilot AI tool that you can ask questions regarding various businesses, and it gives you a sourced response, which is super nice,
to say the least.
Not just making stuff up, which is nice. We appreciate that, as well as KPIs and all of the earnings call transcripts, slides, all of that stuff. It's on FinChat. So if you're thinking about getting a plan with FinChat, take advantage of that 25% off. If you don't make it before December 2nd, don't worry. They still allow 15% off with our link in the description.
FinChat.io/CSI. Check it out through December 2nd, 25% off, or after December 2nd, 15% off using our link.
Okay, let's get back to the financials for Allegro. This slide showing the revenue, net income, and free cash flow. You can see that Allegro was scaling up quite nicely before the downturn hit. Their net income, free cash flow were both in the positive, but then the downturn kind of came for Allegro, and their net income became negative and their free cash flow dwindled.
Mm-hmm. And that's still the situation right now. As you may know, if you've been following our videos here, the whole industrial and automotive supply chain, including a lot of chip stocks that supply automakers and industrial equipment makers, have been hit pretty hard. Allegro is, as you can see, quite small compared to a lot of the bigger industrial chip makers and chip suppliers. And so their profitability is even more sensitive than average to this downturn. This is the hole that they need to dig themselves out of, but there is some good news. There is expected to be a rebound in industrial and sensor and power chip sales in 2025. So the WSTS forecast, this goes back to earlier this year, in spring of 2024. We'll provide some commentary, our own commentary on what to actually expect for 2025. You can see an expected uptick, 6% rebound in 2025 over 2024. We'll talk about what that is going to possibly look like here momentarily, but still the overarching theme here is 2025 is looking like it will be much better than 2024 for companies like Allegro. Let's backtrack here to the balance sheet, which we talked about earlier, and Allegro needing to part ways a bit more with Sunken. Here's the balance sheet.
Yeah, we were actually a little concerned about Allegro when they made that Crocus acquisition, which we'll discuss a little bit more here in just a couple of moments. But the balance sheet actually is in better shape than we thought after that acquisition closed last year. There's definitely some more work to be done separating from Sunken and Polar, but still not too bad. After that acquisition, you can see the debt has spiked up to just over $387 million. However, short-term cash just under $200 million, long-term investments sitting at $30 million. So all in all, not the worst.
Yeah, and the reason for the most recent spike in the debt was Allegro took that out in order to start making those share repurchases from Sunken to reduce Sunken's total ownership of Allegro. So that's the reason why that is in place. And this is an evolving story. We'll keep an eye on this. And this is something that if you decide to follow Allegro Microsystems, you might want to keep an eye on as well.
Okay, now here are the valuation metrics for Allegro. Forward price to earnings, right around 54 times. Forward price to free cash flow, over 107 times. This valuation only makes sense if you believe Allegro can get back to the sales volume that it had in 2022, which should correspond with a broader market rebound that is forecasted in 2025. That's what we talked about on that WSTS slide regarding sensors specifically.
Okay, Kasey, finally, we've gotten to the acquisition of Crocus that closed last year, which was a small startup. What are TMR sensors?
That's a fantastic question. TMR stands for Tunneling Magnetoresistance Sensors. These sensors are integrated circuits. We have a video explaining the TMR sensors from Allegro. You can watch the full video. It's only 1.5 minutes long. We'll show a quick clip of it here.
TMR sensors are really kind of taking the torch from some older sensor technology called Hall effect sensors. And these things are expected to grow at a pretty decent clip through the end of this decade. We mentioned earlier about the motor driver integrated circuits. These are essentially what these are for. It helps drive a motorized system. So any moving part ultimately needs a motor drive in it. And these are very, very sensitive sensors. These TMR sensors are very, very sensitive sensors that increase the accuracy and the speed in which they operate. And this is why Allegro ultimately acquired this startup called Crocus. They expect that the Hall effect sensors will kind of lose market share over the course of the next couple of decades. And they think TMR is where a lot of the money will ultimately head because of the increasing sensitivity needed for things like EVs, autonomous vehicle systems, and of course, robotics, especially industrial robotics that are used in things like manufacturing.
When we're talking about these TMR sensors, it seems like it would be a big safety benefit, right? Especially with advanced driver assist systems, industrial applications, and robotics. The faster, more accurate the sensing, the better the outcome.
Yeah, absolutely. Per usual, though, the main problem with these things is they're more expensive than the older technology. And so that's why adoption is going to be very slow and it's going to be gradual. Remember, Kasey said earlier at the video, you need to have an economic use case for robotics. We're not just going to have robots walking around the world with us because no one is going to invest in that unless there's a good reason for it. And more reasons for investing in that stuff will become available as the underlying technology gets more affordable and cheaper. So do take it slow with this type of stuff. But again, if this is on your radar and you're looking for a way to invest in it, a company like Allegro Microsystems is one that we think should at least be on your radar, something that you should be aware of, and you can start to understand more of the underlying technology behind robotics and physical AI.
One thing that you do need to keep in mind is the cycle bottom for the auto industrial power. We have that labeled there in the bottom. It's taking much longer to recover than I think we expected and the market in general expected. That said, all indications are that power and sensor chip inventories are coming back down to a more normal level, which sets the stage for a more gradual recovery in 2025. So all that said, let's talk about what our final key takeaway is for Allegro Microsystems. This is our current CSI power and sensor basket on semi, microchip, monolithic power systems. We also have some small cap companies, Air Test Systems and Axcelis. We don't have Allegro Microsystems. Why not?
At this point, our basket is pretty well diversified in this market. We kind of treat this almost as like all one asset. Individually, each of these businesses doesn't really make up a core position in our portfolio, but collectively they do. And so adding yet another sensor company, even if the sensors, the Hall effect sensors and the TMR sensors that Allegro does, adding it to the basket doesn't really add anything different than what we already presently have for us personally. And that's because, like Kasey explained in the previous two slides, these magnetic sensor chips are going to very closely align with the recovery in good old-fashioned industrial and power chips like what we already have. Some of these companies as well, like Monolithic Power Systems, also do some things in magnetic sensors as well. So for us personally, we're not adding to Allegro. If we were going to add to Allegro, though, it would be part of our small bets basket, a very, very small position, well under 1% of our total portfolio, along with Air and Axcelis.
That said, this may be a good company for your portfolio personally. Hopefully, presenting this information helps you make a good decision for your portfolio.
And do mind the risk. Robotics is super exciting. Thinking about a recovery in automotive and industrial is also exciting, but Allegro does have some unique challenges as it kind of repositions itself as a US-based company and continues to have to spend money ultimately separating itself from its old Japanese industrialist parent organization. So mind those risks. Also, it's not currently a profitable business much at all. So there's some peculiar challenges for Allegro, but if they're able to pull it off, perhaps that ugly looking valuation chart that we showed you earlier from finchat.io starts to look much prettier in 2025. So keep an eye on this one and join us on Semiconductor Insider. Also, Cyber Monday sale for us that's going on the rest of December, really, only $5 a month if you sign up before 2025. It goes up to $10 a month starting in 2025. So we'll be talking about Allegro over there if you want to join us and our community on those discussions.
Thanks for watching this episode today of Chip Stock Investor. See you again soon. Make sure you sub to the channel, like the video, and share with your friends.